We're talking about the global opportunity. We're talking with John Bellows of Western. John, give us a snapshot of what you're seeing in the global scene today.
Well, obviously there's been a big change in the outlook after the surprise election of Donald Trump. That's led to some more optimism on the policy front, and that's led to some more optimism on growth. You've seen risk assets respond very powerfully to that. I think the other thing to keep in mind, though, is that we've also seen an increase in the risks. And so whether that's risks from administration policy, trade, immigration, foreign policy are all on that list, or whether it's risks around the globe, those risks, if anything, have gone up.
Well, I know it's early on in the new administration, but can you give us an outlook for the rest of the year?
I think what we expect is for them to refocus somewhat on the economic agenda. They have a very ambitious economic agenda: tax cuts, infrastructure spending, deregulation. And I think as we move forward, that's going to be increasingly the focus.
How can the investors today take advantage of the global scene?
Well, we think the opportunity in risk assets is still there. Risk assets had a good year last year. We think that that could continue. We still think there's some value in corporate bonds. We think there's some value in emerging markets. And if we do see a realization of better GDP growth and better nominal GDP growth, that could continue. And I think investors should have some risk assets in their portfolio.
Thinking for a moment about Europe, there's been a lot in the news lately about concerns and the level of uncertainty in Europe. And how do you respond to that?
Yeah, it's very real. Our view going forward is a few things. The first is I think the ECB is a really important backstop in Europe, and we don't think that's going away. The ECB is committed to their QE program through the end of the year. The inflation outlook has not changed enough for them to rethink that.
All in all, what's your parting message for investors today?
The way we think about it is we think there's an upside risk in the United States. I talked about that in terms of the policy mix. I think the risks globally are probably still to the downside, especially in China, low inflation, maybe some of the political risks in Europe. And the best way to position for that is with a diversified portfolio where you have the risk assets in the United States, corporate bonds, if whatever you can invest in, but against that have some diversification, have that treasury bond offset. That's worked well, and we think that will continue to work well going forward.